Hey folks, Robert Darrow here, your sunshine guru with Keller Williams Real Estate in Fort Lauderdale. And I was speaking with a client yesterday, and she'd indicated that she'd gotten a pre-approval letter with a lender, and her interest rate was going to be around 4.25%, but she wondered if it was possible to shop around and get a better interest rate. During the course of the conversation, it sounded like her experience was with buying a car or getting a credit card. When you shop for a car or when you're applying for a credit card, your interest rate will vary greatly from anywhere from 0% almost all the way up to 30%, both for credit cards and for cars. If you purchase a car, you buy a brand new car, you might be able to get a low interest rate. If you buy a used car and you don't have perfect credit and you've got blemishes on your credit report, you could pay almost 30% interest. The sky is the limit on car loans, and it can feel like it's the same way with credit cards. When you're shopping for a home mortgage, the programs change, but the interest rate typically stays the same, and this is due to government regulations, and they don't want people who are shopping for mortgages to get taken advantage of by lenders. It's very difficult to play with the interest rate on a home mortgage. In order to protect themselves, the lenders will do things like require a larger down payment or take away some of the programs that a more well-qualified borrower might be able to take advantage of. Say a perfect example might be an FHA loan where you'd only put 3% or 3.5% as a down payment, and then you would have a very low mortgage insurance. The next step up from there might be a conventional mortgage, but with 5% down or 10% down, but it's not backed, it's not a government program, so you're going to pay slightly higher private mortgage insurance on top of your monthly payment and your interest rate. But the interest rate's always going to hover right around the 4.5%. Something else is going to happen. You probably need a mortgage approval letter today in order to go shopping for homes this week or this weekend. And the interest rate that they quote are today's rates, which might be 4%, 4.25%, 4.5% interest. But they can't lock those rates in until you actually go to contract on a house. So let's say you were of a mind to actually shop around and pit 3 different lenders against each other, say a mortgage broker, Quicken Loans, and Chase Bank. You might choose to get your mortgage pre-approval letter through the lowest interest rate provider, but in 2 weeks or 3 weeks or a month when you go under contract on a new house, you go back to that lender and all of a sudden that lender's programs have changed a little bit, or their source of financing has changed and they don't have the lowest interest rate anymore. However, it's very difficult to actually change lenders once you've submitted your tax returns and your pay stubs and your bank statements and all that sort of paperwork to the lender that generated the pre-approval. So find a relationship with the person that you're most comfortable working with, the one that answers your telephone calls and your emails, who works on the same schedule that you do, or perhaps works on the opposite schedule that you do, so that they return your telephone calls when you're available, and perhaps works on weekends, and then keep that relationship alive, because that's the person who's going to be able to get the loan done, get it done on time, and get you towards the successful closing. I wanted to bring this up for the folks that I don't always have the opportunity to have a long conversation with over the telephone, or for the folks that I haven't quite met yet, but I'll have the ability to at least give you this heads up before we have a chance to meet. I really appreciate you watching the video all the way through, and I hope we get a chance to speak soon.